Talk about giving it all, including the kitchen sink.
Yeah, that's right. This is the broadest push so far year to date by authorities and what the markets and many economists, analysts have been calling for, and that is broader policy support. You can call it a bazooka or not because we have to see how well this is targeted, but it is a very welcome move. We have stocks on the rise in Hong Kong and in China on these moves that address some real issues. Obviously, this injects a lot of liquidity, these moves by the PBOC and the two other finance officials, including the securities regulator, on a very rare stage today and basically laying out their policy priorities. So stocks are up. They also address some of the shortcomings in the property market. Keep in mind, back in May, authorities really unveiled a support package, but it didn't really filter out. Stocks sold off since May. Stocks have been down about 13% before today since May 20th, after that rescue package for housing, which didn't really have a lot of efficacy. So now they're hoping, with about 3 months left in the year and still with that growth target of around 5% GDP growth still in the sights, this will help push authorities past that goal of GDP growth of around 5%. What did they do? Well, they cut the policy 7-day reverse repo rate. That is the second time they've done that since July. This also follows the 14-day policy reverse repo rate cut that we saw yesterday. They also cut the RRR, the reserve ratio requirement for banks. That's the requirement that banks essentially have to set aside. So that adds liquidity. Pan Gongsheng, the PBOC governor, essentially saying this will unleash $1 trillion yuan, or 142 billion US dollars in liquidity. He also signaled going forward they could have more RRR cuts, more monetary stimulus, if the data suggests it is needed. So again, it might be called a bazooka. It is very welcome in the market right now. It is something that many market participants have been hoping for to boost sentiment, not only, of course, for liquidity, but for the stock market, because as you mentioned, there are measures as well for brokerages and other funds to be able to tap PBOC funds to invest in the stock market. So that's good. And it also addresses some of the mortgage concerns, homeowners who have lost about 18 trillion US dollars in household wealth in this years-long property crisis.
Steve, that bazooka is sending the Hang Seng China Enterprises Index more than 3% as we speak. The thing is, when you take a look at the CSI 300, it's up about 1.5% max. I mean, I'm not sure if there's still trepidation or investors are actually looking for more consumption, for instance, measures to boost consumption in China.
Yeah, I think a good barometer will be coming in the next week or two when the National Day holiday happens here in China. It's a week-long holiday. People have to feel confident to go out and travel, to spend as well. And right now, of course, the property market is still a falling knife that many households do not necessarily want to jump in. They're trying to incentivize it to lower those mortgage rates for new home buyers and also lessen the burden on households for existing mortgage holders. But again, confidence right now is clearly low. Retail sales have been just trending in very low single digits for many months. Corporates are also very reluctant to borrow right now at a time when deflation is having its longest streak in since 1999, 23 straight months of factory gate deflation. So there are some structural issues here that still need to be addressed. But again, these moves right now by monetary officials led by the PBOC governor Pan Gongsheng are very welcome.